Well, welcome to this week's episode of MVP Real Estate Podcast. We have Jared Ash from the warm and sunny San Francisco area. Welcome to the show. Thanks for giving us your time. We're excited to hear about Crown Capital.
Yeah, thank you for having me. I'm excited to be here with you guys today.
Yeah, it's exciting. We've only had, I think, Natasha, 2 syndication firms. You'd be the third.
I believe so.
But we haven't had anybody. One was in Hawaii, so I guess technically he's still national. But there isn't a lot that we've had to talk to. So I'm excited to find out more of the back end stuff about multifamily syndication, which is kind of your niche, correct?
Yes.
Awesome. So you're staying fourplex and below, or do you guys go into apartments? Because that kind of teeters into commercial.
Yeah, so we are, we have 134, a 92, and a 64, and are doing a 42 right now.
Awesome. And we're going to get into your whole legacy of where you guys started. What was your first deal? Because that's always memorable for an investor. You always remember the first deal. But it's obviously, I'm guessing, taken some years to get up to those apartment complexes. So can you kind of give us a 30-second elevator, where I came from and here I am now, just to give people kind of a background of where you've come from?
Yeah, so I actually come out of the government affairs consulting space. I work and help companies connect to government all over the country. And about 5 years ago now, 5 years ago, I started buying single family homes. And living in the San Francisco area, I was buying them in Memphis through a turnkey provider. And it was simple and it was great cash flow, but there was no scalability, because I looked and said, okay, to get to $5,000 a month, it would take about 15 years at the rate I was going. And so I was looking for ways I could use my skills to create that $5,000 a month passive income. And it was really starting to dive into the multifamily space. So I've been involved in it for 2 years. Took about a year to really study it and know it before I dove into it.
That's awesome. You said you started, how was it again?
In the single family investment space, using an out-of-state turnkey provider.
Yeah, I was going to touch on investing in San Francisco. To get cash flow has to be impossible, from what I'm hearing.
Yeah, and I've talked to some other syndicators that I know, because they're in the same area, and we've actually looked at 2 or 3 buildings, and none of us can turn more than like a 2 to 3% cash on cash in year 2. And it was too risky. If there was a market dip on the multifamily, you really need to hold it for 10, 15 years. It's not the best for a syndication. It's better for larger funds that are coming in and mostly buying it in cash and other things. And that was before the interest rates started going crazy. The house flipping market here is really good, though. I know a lot of people in that, and they are still turning a pretty profit.
Yeah, I'm sure there's some old houses that need to be updated. And for the home sale price now, I'm sure you can still make your numbers work on the flips.
Yeah.
But I've heard a lot of buy and hold investors have been trying to stay out of those markets where prices are inflated. It's harder to get the cash flow, which obviously for a smart investor like you go into Memphis, which is at that time was like the up and coming rental market.
Well, all my houses are 3% interest rate for an out-of-state owned investor. So I don't know that I'm going to be able to duplicate that again. And I think the tenant that I got in 2016 is still in the unit, and every year the rent is going up slightly below market, but I've never had turnover in any of my properties. And so that's a relief, you know?
Yeah, no, that's awesome. And I mean, that's proof to people that, I mean, you want to get into real estate, you didn't have a background. There are turnkey people out there that you can go find. How did you find the person in Memphis that you worked with?
From referrals from networking groups coming in, and a couple of other investors in the Bay Area had done it. And I've heard them speak before on a number of podcasts and a number of conferences. And I went down there and visited, and they said, I'm one of like 2% of investors that actually ever even go and look at the market and explore the houses and all of that.
Really?
I like to see and touch things, especially if I'm putting money into it.
Yeah. I mean, that's the reason that I invest in real estate and not stocks. I like the tangible aspect of it where I can see it and feel it, and it seems real to me. But the reason I asked that question is it's possible to not spend any money and get connected to people that can help you make money. You don't need to go to big seminars. You don't need to drop thousands of dollars to speakers. You can network and get connected to people that'll help you instantly just get your cash flow going.
And I do that for a living, both in government affairs and in real estate. This is a relationship business, and I really care about the investors and get to know them.
Yeah. Mm-hmm. Did you ever read Networking as a Contact Sport? It's a book from like 15 years ago.
I don't know if I've read that one, but I've read like a dozen books on networking. So I'm going to write that down and add that to my list.
Yeah, it's and if you've got some good books, you can obviously leave us. We'll leave them in the show notes for the readers, because we do highlight books every once in a while. But yeah, it's a fascinating thing to invest out of state. I have not broken that barrier yet. That's a fear of mine that's a little bit too high. But for you, you invest in Memphis. One obstacle you tackled was finding the property and having it cash flow. You got help with that. And now you have your property under contract, or you buy it. Now you have to manage the property. So
actually, those were easy compared to what I'm doing now. Those were all a turnkey provider. They found the house, they retrofitted it, they did everything. And to me, that was a perfect way, if you were looking out of state, to get involved, because they really did make everything very simple. And one of the things I liked about my provider is that, like, they roll, like every house has like the same door handles or same ceiling fans. And so it just makes their maintenance really easy. They have a guy in the truck just rolling from house to house with the same equipment.
Yeah. It's the process. It's the systems they have set up. That's the big part. I talk to all my tenants, like, I'm not this guru of property management, but the systems we have, if you follow them, make our process so much easier, makes everything go faster. So trying to get the people on those systems that you have built, which you are proof that there's people out there that can take that stuff. And then you basically can look at yourself as the bank. So you're providing the funds, they provide all of the sweat equity in it. And then I'm sure it's a percentage off the top.
Yeah, I mean, I'm sure I could get the houses cheaper myself. And then they get a monthly fee for property management and everything. But it's, as an out-of-state investor to get started, it was really as passive as you could make it, which is what we offer people in the multifamily syndication space. Our investors get a monthly newsletter and a quarterly check. And actually one deal is getting a monthly check. And other than that, we take care of everything for them.
That's awesome.
Really nice.
So it sounds like you did your progression pretty well. You got your properties in Memphis. You avoided going to get the Lamborghinis and the plane, reinvested it, and then now you've opened up a bigger scale of what you did before, but now offering other people to jump in the success that you had.
Yeah. But the road wasn't easy, if I can chime in here.
Yeah.
My first two forays into this space actually did not go well. Oh. And I like to tell this story because when everybody says, oh, I always put the investor first, I'm the guy that returned millions of dollars to investors before the deal closed. And I pulled out of a deal. I pulled out of two deals. One, because once we got the due diligence, it was right after the Texas ice storm, like 2 years ago, that decimated parts of Texas. And when we got into the building, we were like on our last day for due diligence, we found massive foundation problems, massive plumbing problems, gaping holes in the roof. And when we looked at our budget, it was $1.5 million for upgrading each unit and upgrading like the whole property. And we determined that we couldn't actually afford all of those. Like, we budgeted money for like a roof or plumbing, or like we didn't budget everything.
Yeah.
And so we said this deal wouldn't offer the same returns for investors, and we didn't do that. And then I got into another deal and we had problems with the loans. And that one I had was the first one I had everybody wire their money in. And we wired it back. Plus we paid everybody their $20 for their wiring fees back out of our pockets. And I say that because when I saw a red flag, my first goal was to make sure I don't take the responsibility of losing anybody's principal investment.
Mm-hmm.
And if somebody's going to trust me with 50 or 100 or $250,000, I don't want to mess that up.
Mhm.
Yeah.
Even if I can't make them any money. And actually, I earned a lot of respect from my investors for that. And several of them have been there for my next 3 projects.
Wow.
They've stayed with me because they grew to respect that philosophy.
Yeah.
Smart.
I mean,
Never lose them money.
when you, that's a good thing to live by. If you're going to hold their money secure and safe, I'm sure they'll come back. And you have to say, yep, it does stink that we had to pull out of the deal. They didn't make money on this one. But if we would have gone in, they could have lost. And then you've lost a customer forever.
Mm-hmm.
So by pulling out and saying, yeah, it's just not the right deal for you. Sorry, we're going to get you back into a better deal. I could definitely see them taking some respect on the stance you took and was like, I'll stay with this guy so he can get me a deal that'll actually work. So kudos for that, because there's a lot of pressure that isn't talked about just to keep going with it, because everybody's amped up, and especially on your last day of due diligence, you're getting pretty close to closing.
Yeah.
So kudos. That is a very, very difficult, and you really don't understand the difficult nature of it until you're sitting in that shoe. And on the agent side, are you an agent or licensed agent or just do investments? So when we're going through and I've got either buyers or sellers, let's go on the seller side. They get an offer in, and let's say they're selling for $250, and they get an offer for $225, but it's a verbal. They're like, no, we're not interested. Until that offer is on the table and you actually know it's real, it's easy to say no. But once it's real, it's very, very difficult to say no to that money. So I just want to highlight that fact that better safe than sorry, especially with other people's money. There's penalties for that stuff. So always got to do it safe.
My husband always says, don't screw with people's money. That's his number one rule he lives by, whether it be employees or investors. Just don't screw with people's money.
Right. Treat them with respect, you know? And it's not easy for us to pull out of those deals. I mean, we spent a lot of time and energy, but it was what was right for everybody involved. And hey, we learned lessons, and we're on to several successful projects right now.
Yep, absolutely. So can you take us from the startup of, okay, you have your properties in Nashville, and then, okay, I want to do this on a bigger scale. How did you get the concept or get the idea of I'm just going to start being the bank. I'm just going to start Crown Capital. We're going to be a multifamily syndicator. I've already got my network. This is just the path that I want to go. Where did that click for you?
I was looking at, just being in the space. I was listening to podcasts. I was watching webinars that people were doing, attended a conference or two, and started hearing it. And first it was like, how am I going to go buy that? I don't have that money. I don't have that skill set. But then I started looking at, well, what skill sets do you need to make a deal great? And what can I offer given my background and expertise? And that was relationships. And it was not just my network, but it's my ability to connect to people, listen to them, prioritize what they prioritize on. And I was talking to somebody who's retired and is 75, and he wanted a deal that wasn't going to last more than 3 years, because he's like, he just had the attitude, I might not be around, or I don't care where a deal is in 10 years. Find me a deal in 3 years. And so I wanted to find a deal that would cash flow at least 7% for him. And I didn't bring him my first 2 deals. I brought him the next deal that worked. And so just that mentality, I said, that's my skill set, is to listen to people, bring my network in, and do that. And so I started just talking to dozens and dozens of people in the space. And I actually did our first deal, not as Crown Capital. It was done with some other partners. Tiffany Span, who is one of my partners in Crown Capital, was involved in that deal. Lupe Chow, who's another one of our partners, was an investor in that deal. Tiffany and Lupe had another business together. And the fourth gentleman, Noel, we all just sort of came together through that deal, and then on to the next one. And everybody brings a different skill set to the equation. And it just made sense for us to start working together.
Yeah. And that's a big thing about real estate is you're not going to do it alone. It's impossible. I think when I was early on listening to, I think it was Bigger Pockets. That was always a podcast that I listened to.
Yep.
They always
Bigger
talked
Pockets.
about your stool. You need 4 legs. You can't have a stool with 3, 2, or 1. It needs to be 4 legs. You got to find your 4 legs. And that kind of resonated with me about, as this gets bigger, I need more people to help me out, which is cool that you were able to find all of those people and then bring them under one roof, to make things obviously happen there with Crown. And you guys have all been together for 4 years, but have been in real estate for longer, or did I get the dates?
We've known each other for a variety of 2, 3, and 4 years. We've been together for a full year now, and have 3 apartment complexes, and have a 4th under contract that'll start due diligence next week.
That's awesome. And it's cooler to hear you guys started after the whole COVID shutdown thing, which has its challenges in alone by itself. So kudos to you guys for keep going, and you're buying apartment complexes through it. Was for you personally, was moving from single family, which is what you've done before, moving up to these apartment buildings, was there any fear in that one, or had your partners been in the commercial space that helps like kind of level the emotions of it?
They have in different ways. Yeah. Tiffany and Lupe have been LP investors on projects, and then they own a number of like vacation rentals together. And then Noel owns both a house flipping business and a number of entities in the Philadelphia area, where he's got a pretty high unit count when it's all said and done, and owns a number of other businesses. I would say the biggest part of the transition is going, really those houses I had in Memphis were, I was very much a passive investor, right? Because the turnkey provider did so much for me, to now I'm a really active partner, right? And so
Yeah.
it is kind of like a second job in some ways for me, not for the investors. The investors get to invest passively.
Yeah.
But for me, I've got to watch over their money. I'm responsible for that due diligence on the ground. I'm not swinging a hammer, but we gotta oversee the guy who's swinging the hammer.
Yeah, absolutely. And then that was going to be a question that I had later on. With you guys investing all over the country, how do you guys vet your GCs or your subcontractors or your property managers? Because you're dealing with all different municipalities, through all different states, through all different zoning. Like, how do you keep all that straight, and how do you vet them from being across the country? Because I'll be honest, that's one of the things that keeps me from crossing the state lines, because it doesn't seem like a lot, but I mean, that's more time that you need to put into managing the property manager to make sure that that property is producing, because you have to have answers for your investors. So you got to be involved in some capacity.
Yeah, no, I mean, we have to asset manage it, right? We have to oversee it and take responsibility. So most of the time when we're hiring a property management company, they also have a construction arm. And that's generally what we're looking, because we're looking for added value properties like, you go into a home, you want to improve it, you want to force some equity into the equation, whether you're flipping it or you're renting it long-term, you still want to force some appreciation. That's what we're doing here. Now, there's other things that go into it. Increasing rents increases the value of it. Mm-hmm. Increasing amenities gets you higher rents. So it all goes together with it. In the case of our Houston deal, where we have 134 units, the property management company is actually the owner of that company is our key principal on the deal. And our lender actually liked the deal a lot, and they came in. And that's good, because that is a total reposition. That is a C-class building in a B class neighborhood, and we're going from a C class property to a B plus level, and turning over, hopefully within 18 months, we'll turn over all 134 units.
That's awesome. That's a really quick turnaround for an apartment complex.
Yeah. And then on another deal, the 42 unit we're just putting under contract now. We did some due diligence, and we met and interviewed just a number of property managers. That's probably going to be a Section 8 related play. And we were looking for people who had experience in that market with that kind of work. And we picked the best one. And how do we get introduced to them? It's just our network.
Wow.
Right. And that property is just horribly managed now. And that's the biggest room for improvement in forcing equity, is just that they're mismanaging the deal.
Yeah. And you hear that all the time. If you haven't listened to other podcasts, listen to real estate podcasts, and they will beat the whole like management properly to death. Like that is one thing that's so easy to fix. They've had numerous guests on that buy apartments, like you were saying, in like a C or D area. And there was one guy that bought one in a D area, and all he did was hire a like a security guard. So there was one on rotation for 24 hours, just standing in the lobby or outside, 24 hours. And after like 8 months, all the riffraff left. Tenants that were living there that couldn't do what they wanted to do left. He got new tenants in, he updated it, and then he sold it for like double what he bought it for. All because he just cleaned up what was going on around it. It was crazy. And he was like, I didn't even know, because it was an out-of-state investment. And he's like, I didn't even know what the culture was all around, or what was going on around the apartment complex. But when I got there, it was like one thing that had to be done. And it turned out to be like the best thing he could have done, was just cleaned it up.
Yeah. I'm a big fan of adding flower pots in parking lots when you have a property that doesn't have like a lot of grounds, right? So there's one property we were just looking at, and I was like, hey, I want to bring in flower pots in front of like everybody's parking space and by like the stairs to the top floor, because there's not a lot of green space. And I was like, this will just make everybody like happy when they come in the spring and summer. And
yeah.
Now, I guess
you go into apartment.
Do you do fake flowers or real flowers?
I was going to do real flowers, but we do have to go with winter there, where I live in an area now that we keep green year round. But
I was gonna say, we just got window boxes in all of our house, and I was like, there's no way I'm gonna water the plants, pay for the plants, and then have them die. So we chose to do all faux flowers.
That actually, now I'm gonna consider that, because you're right, you gotta make sure somebody's watering them.
Yeah, yep. And it really, and you can buy so many things now that look so realistic that it's like, just so return on investment, like you can reuse those every year. You can put them in storage when you want to change whatever it looks like for this season, and then just reopen it next season.
Yeah, I'm all about the fake plants. It's actually interesting to consider that, and you can make it like fall themes and exactly. Holiday themes and other things as well.
Exactly.
Yeah. And that's a super cool, like, added benefit you were talking about before, was just the added benefit of making it feel homey. Mm-hmm. Like, don't make it feel like you're walking into somewhere you don't want to be.
Right.
Because now you've got a tenant that, one, isn't going to care about the space, and two, just use all their motivation to get out. And that's what you don't want as investors, a vacant unit. You'd want them to stay and feel inviting, which is a super hard thing to do. I mean, you've done it too. A single family home makes it feel like it's your home. An apartment complex makes it seem like it's somewhat temporary.
Yep.
So trying to elongate the stay, I guess, would be a major plus for you and your investors.
With a good quality tenant. Yeah. One of the things on a property we were just talking to somebody on, they have 50% of their people turn over every year. Now they have a wait list, so they always have people coming in, but that's a big turnover for those units. It's a lot of cost.
Exactly. And I was going to say, like, it's nice to have the waiting list, but every time an apartment turns over, there are costs to cleaning, management fees to flip it over. Like, those are costs that you could eliminate, which would be great.
Well, and and think about just what you said about treating your home like it's yours, even if you're renting it. The person who's leaving after 8 months or 12 months isn't treating that apartment the same way. Now, there are 5 apartments in that same building that I was told people have lived for 20 plus years.
Wow.
And so like those people are probably treating it a little bit nicer inside their units, but yeah.
Yeah. And I just had one of my tenants text me, was like, hey, the baseboards are getting a little dirty. I was a professional painter. Would you mind if I touched up the trim? And in my head, I'm like, okay, like I'll bring the paint, I'll bring paint brushes, and then here's $75 to go out to dinner. Because I'm looking at it, when I turn that rent or that unit over, those are things I'm gonna have to do and have to pay for. If you want to take that on and treat it nicely, go for it. And then I'm gonna help you out and give you a little bit of cash. Do I do that for all the tenants? No.
Yeah.
But the painter, I trusted. That was a good one. I like that one.
Well, my question for you, Jared, is how many times a year do you go through and like do a check of the residents? Like, I know for our investment property, they come out, I think, twice a year right now to look over the property, see how well it's being maintained, and see if there's any issues with it.
So in the multifamily space, we have management on site, right? So a maintenance person that lives there, and at least one, maybe 2 people in an office all the time. And they're there. I don't know that we're going into the units during the course of a lease. So if somebody, if somebody's lease ends and renews, we might do just a quick walkthrough with them and just make it as more of, hey, we just want to make sure there's any maintenance issues. But as they have maintenance requests, even if they're simple, that maintenance guy is going into the apartment and doing a quick scan. Now, I've been on due diligence tours myself where there's dog stuff all over the apartment. And I was like, I don't know who's living like this.
Gross.
And I was like, okay, and I go back and ask the property manager, okay, I'm writing this unit down. Could we make sure it's like the guy's living in a clean place? How do we address that?
Yeah.
And I'll turn that over to them. But most of the time in a year, you can't necessarily, unless you have complaints, you want to respect their privacy for it. But
yeah,
a lot of them will ask for maintenance at some point during the course of a year, even if it's like a light bulb change or something got stuck in the sink.
Yeah, and the garbage disposal or whatever.
Yeah. And I know that at least with us, when they have animals, we do like a semi-annual check. And that's basically just to see like, okay, do I need to factor in when we do this apartment turnover? Are there baseboard that's chewed up or scratched? Is there a wall that's scratched from the dog or the cat? Like those type of things.
You need to replace carpets or
Yeah. And they usually don't replace them in the moment, but like in the back of my head, I'm like, okay, this turnover is me a little bit bigger. I can tell the tenant like, hey, this carpet is damaged, like heads up, your security deposit is probably going to be on this carpet. And then it's not like, oh my gosh, where'd my security deposit go? It's like, we know months ahead of time what's happening.
And it's, what's important in multifamily is the grounds too. And so, yes, you have landscaping come in and you mow whatever lawn is and you rake the leaves and things like that. But it's also maintaining it. It's somebody there in the morning. If you have a pool, you want somebody to go and straighten all the lounge chairs around the pool just so it looks clean and fresh. Somebody to sweep the floor in the laundry room if you have a joint laundry room or a joint fitness center, and wipe down all the fitness equipment.
Right.
You want somebody to, if there's wood chips in the playground, under the swings, you want somebody who's going to like rake that up and make it look clean. I toured one property when I was learning about due diligence, and they were in like a wind corridor. And if they came back on a Friday with, between Friday and Monday, they had to spend like hours cleaning up trash because people might have been putting their trash next to the dumpsters or something, but it was blowing all over the place and it just looked gross. And I gave them the suggestion of one, build better enclosures, which they said was a problem with the garbage company. And I called the mayor's office for them and said, hey, this is a problem. Can you work with us with the garbage company to address this a little better on these enclosures? So just managing those grounds is important for the feel and the vibe of the class of the property.
Yeah. And I mean, you say that, but not everybody, when you walk into an apartment complex, like gathers what they're seeing. Because you can walk into an apartment complex today or walk into two different ones and notice, like, are the garbage cans full? Are the desks in the lobby wiped down? Is there like mud on the carpet? If you do have a pool, is everything in disarray? Like, if you can go into a apartment complex that everything is neat and orderly and cleaned up, like that's their value add. That's where they get part of their higher rents. Obviously, the units are probably more updated too, but the care that you have for the grounds and the common space. And one thing that's big for me is like the smell in the lobby. If the smell in the lobby is a culmination of everybody living there, it's probably going to be sour. So to like freshen that up a little bit.
Well, and I'm looking at it from an investor standpoint, right? Because somebody's trusting me with $50, $100, $250,000, whatever it is. How can I best serve that investor? And part of that is by those grounds being clean or that lobby not stinking is important, because when a new tenant comes in, they're happy. They're more likely to rent and pay a slightly higher rent, which gives the investor a better return. If there's somebody who's living there, they're more likely to stay because they're not seeing trash all over their property, or they know their maintenance requests are being met. And that just helps the overall value of the property and the investor to get a better return. You have to manage it well like that.
Yep. And there's some people out there in the marketplace that do want to live in an apartment. They don't want the yard maintenance. They want a pool, but they don't want to take care of it. They want the patio, but don't want to take care of it. So those people who want to go to those units want it to be clean as well, because they're not going to use it if it's dirty anyways, which means they're out and going to the next one. So for those people, like, you got to give them the best product they can get. And that's part of your product, which the nice thing is there's already wrapped into your numbers. Before you buy it, you know what you're going to have to spend within a few dollars for maintenance, for landscaping, for all those things. So it's worked into the numbers that you purchase it anyways. So it's not like an extra cost that you got to take on, which is going to hurt your numbers. Or hopefully you factor it in, I'll say.
Yeah, no, I mean, we factor not just the maintenance in, but, you know, a lot of people forget to improve the outside grounds. And sometimes, again, putting those flower pots in just can make a big difference. We're dealing with one that Houston property that I was talking about, where we're trying to change from a C to a B plus. It's not just adding a high-end fitness room. We're paying attention to the flooring of that fitness room, but we're redoing the pool deck and bringing in new pool furniture. We're resurfacing the outside of the siding of the building. We're repainting and adding new signs. And all of that is to create just a totally different welcome feeling in there. And yes, spending like 50 grand on shrubbery or whatever sounds expensive, but it's really not when you get that feel for the property. When you start, at 134 units, that pays for itself at like $5 more a month in rent.
Yeah, absolutely. And when you go through and you make the improvements, have you created a system for your investors to see, okay, this unit had a maintenance request, it's been taken care of, or cash flow throughout the year? Can they go on and see what's going on? Or is that like an end of the year report you guys offer?
So we do a monthly newsletter on every property for the investors in it. And sometimes it's not even the numbers. It's just like, this is what's happening. Yeah. Right. And sometimes it's just a market recap. It has nothing to do with our property. It's, hey, this is what's happening in one of our properties is in Louisville. This is what's happening in Louisville in the last 3 months, 6 months that you should be aware of. Once a quarter, we do a bigger report where we try to go through, hey, this is where we are on our rehab plan. This is what we're doing, and provide financials. Hey, our occupancy is at this is good because in the Houston case, we're trying to, retrofit 100% of the units.
Yeah.
In Lubbock, our deal there is we want to keep occupancy over 85 to 90% as much as possible, right? Even though we're rehabbing units and adding value, we don't want that kind of turnover we have in Houston. And so we provide that more so in a quarterly, and then every so often I'll hear from an investor, but then every 3 to 6 months, we'll do just a call and say, hey, hop on, ask us questions. I would say 2 out of every 20 investors get on those calls. Most of them are just checking their files once a month. They're checking their bank account. One of our deals is every quarter. One of them is every month in terms of paychecks.
Awesome. Have you gotten feedback from your investors on those reports?
The feedback is actually minimal. It's, hey, can I get this in a PDF every month in addition to the email? So that's how they save their records. Or can you, I think in the beginning we weren't uploading them to the investor portal as well as files. And then we started doing that when we started putting it in the PDF for the one person. And so they just have everything in one place. We actually had 2 investors that weren't getting anything because it was going to their spam folders. So we worked through that and we learned, okay, we're going to, in the first 3 months of every deal, we want to text or call the investor and make sure they're just getting those reports.
Yeah.
So our feedback is really based on that. But I think so far everybody's like, hey, if you're doing the added value, when is the first check? What is your biggest concern? Right? They always ask, what is our biggest concern right now? That always comes up.
Yeah. And I'm sure that those, even though they don't come back with you with feedback, I'm sure they appreciate seeing it. Even though they're passive investors, to get the numbers every month or every quarter is definitely going to be helpful for them.
Yeah. And there was one newsletter we put out on that one where it's a total retrofit. And it said, hey, the playground's equipment has arrived. We're going to start putting that in. We're going to send you pictures when we have pictures. The Bark Park is being renovated. We'll send you pictures for that. And there was like 5 things they said with the pool furniture. We'll send you pictures for that. All right. Well, the next month newsletter came out and I didn't quite have everything done in the pictures there, but we had a date where we have a professional photographer scheduled now to go because they're going to get pictures for apartments.com and everything else. And I was like, hey, we still owe you the pictures. They're coming. This is what else I could tell you what's happening.
Yeah. And that communication's huge because like no investor wants to be like, hey, here's my money and then I'll see you in 10 years. Like that's a scary thing. So to keep that communication up and constant is huge for your investors.
Other investors, other syndicators send out a quarterly newsletter. I like to just touch base once a month. It doesn't take long to put it together. And then our group sends out, we do a monthly webinar, educational. We just did one on how to reduce your tax income from these properties and your investments. We did one just on property management and how that works, one on interest rates. So we do that just to keep educating our investors, whether they're a current investor or hopefully a future investor. We want to add that value. And part of it is educating. That's why you're doing these podcasts, is to educate your people. Yep.
Education is huge, whether you're in the day-to-day or the passive investor, just to get the education is huge. And I'm sure a lot of your role with investors, just with the investors, is that education piece while they're being managed and before they jump in as an investor. And I actually had a question on your approach to real estate that you're going to buy. So as Crown Capital, do you guys have like a niche? Do you guys go after, I know you've mentioned before, like forcing the appreciation into a property, which means you put money in to upgrade it. And then when you sell it, you should make more money than you put in. The other way to look at it is cash flow, which apartment complexes, that's like their bread and butter is usually the cash flow. But obviously years down the road when you sell, you're going to get the appreciation. Do you guys have like a niche that you focus on going in? Like we're going to dominate cash flow? Or is every deal kind of, we got to see where we can take it and where we can maximize it, and it's either good or bad? Do you guys have like a formal thing or?
Yes, but it always shifts. So one of the debates we're talking about now for a property is the market. right? Lubbock and Louisville is an example of markets. They're both college-based towns, but they are fairly good-sized metro areas. And they are growing metro areas with multiple jobs. They're not just college towns. And we like it. More and more people from 21 to 35 are staying in those towns and adding to population growth. So we like those elements of those towns. And right now we're looking at a town, it's in the South. These apartments there's an added value to it. We love the added value approach. It cash flows 6 months in a day, even though we're going to turn over units, we're going to retrofit them, add that value. Our debate internally is, does the market meet our expectations of a good market, even though the returns, it's a 2.25 multiplier, which is better than we're getting most of the time. We're getting 1.7 to 1.9 right now with the interest rates raising, prices going through the roof for lumber and things like that. And we're talking about, does this market meet our criteria? And it's a small town. There's not a lot around it. They've actually lost some population in the last couple of years. And so we're trying to,
so that deal,
turn that down.
That deal is more about the market than the property.
Right. Because overall, cool. I'm convinced that our numbers are right and we'll get a good return. I just don't love the market.
Yeah, but you also have to say, like, yeah, we could get the return, but that's if the market stays put. We don't know what's going to happen 5 years from now, and now our numbers could change drastically. Is that kind of the thought process?
And we like what I call as recession-proof of a market as you can get. And there's no such thing as totally recession-proof, but we want a diversified economy and a fairly stable economy. And that one actually does meet that metric because in some ways it is such a small area. There's a mid-sized university in that town. It's not a student housing play, but that university is stable. You do have a regional, there's nothing around it for like an hour in terms of larger other towns. So you have even smaller towns around it. So you do have like a good hospital in the area. You do have like a bank regional office in the area. So you do have some jobs that will continue and last through a recession. And that's an important characteristic. I think Louisville, Lubbock, Houston, where we have other properties, will continue to thrive, not to say that they won't be impacted by a recession, but comparatively to the rest of the country.
Yeah.
And I'll touch on that. If you have a 401k now, right? Anybody's 401k is down somewhere between probably 15 to 30% in year to date for 2022. Yeah. Going back to don't lose an investor's money. If you had $100,000 you put into the stock market, into your 401k on January 1st, you now are probably at $78,000 in there, right? Give or take. Any of our deals, even if they're not cash flowing, you still have your 100,000 in principal sitting there.
Yep.
And there's something backing it up, and that's the power of real estate.
Yep. And that's the great part about it. I do have the retirement policies. They are not performing like the real estate is right now. Do you expect, this is future talks, you got to look in your crystal ball here.
Oh boy.
Going forward with everything going on, interest rates going up, the talk of a crash coming, are you protecting yourself there? Do you feel like it's not going to hit as hard as like 08, 09? Because that's kind of what the talks are, is things falling like it did.
Here's the value of multifamily, particularly versus single family. Rents are still going up. And I was just listening to 2 different large scale lenders in the space that are actually looking to expand in it because they see rents. I mean, in the last 2 years, you've had rents in some markets go 10, 15% up. I don't think that'll stay. But they're still expecting 5%, 7% rent bumps. Okay, maybe that's too high. We're underwriting a property now with 2 to 3% rent bump despite a bad economy. So I don't see us losing money. Maybe we hit 0. Maybe there's a year that gets so bad we don't get any rental increase. We still haven't lost anybody's principal.
Mm-hmm.
We're still holding steady, and on a 5-year trajectory. I don't think there's any point in America, even during that 08, 09 crash, where on a 5-year trajectory, you haven't gained money in real estate.
Yeah. And it's safe. For the most part, it's been safe, which is great.
And then if you look at these, there's a lot of markets, not all of them, where you have a demand.
Yeah.
Houston, Lubbock, right? There is a demand in those markets for more housing. It's just a matter of, can you get the right class and the right rent dollars to make your deal work with 8% interest rates?
Yeah, I know. And that's the tough part, is to make the numbers all work. Do you have, and are you guys looking specifically at any markets other than the Houston and Lubbock that you are talking about where you've got deals? Are there like ones on the horizon where you're like, yeah, keep an eye on this one. It's kind of warm. We'll see where it goes.
We like Lubbock. We like Louisville. We hope to do more deals in those because I like those towns. I like how their population is steadily rising, that their jobs are increasing in an educated workforce way. So I like those. We love a lot of the Atlanta suburbs. We're spending time, and you're getting
Atlanta was raising
good cash flow. Yeah.
I heard Atlanta, obviously there's always going to be a market in Atlanta. It's a huge city. But I've heard it's not quite what you're seeing in San Francisco, but prices of homes have been rising rapidly in Atlanta.
Yeah, I know some people with a couple of single family homes and that have been buying 2, 3, 4 a year, and they can't keep doing that anymore because the numbers aren't cash flowing for them. It becomes a longer term hold. But in the multifamily space, we could still get the cash flow down there.
Yeah. Mm-hmm. And you guys go in with already established, you just raise them. You wouldn't go into Lubbock with the new build, correct? You guys aren't doing any new builds like that?
Not right now. And I think you're actually going to see that slow down in the next year or two. I think that side of the business will contract, which is good for those of us that owned existing buildings because it continues to push rents and demand up. And that's because labor is so expensive right now. Cost of construction, supply chain issues still tend to be a problem. It's just making new build hard. And with new build, you don't cash flow for 2 years, right? I like to cash flow within a year at the latest.
Yeah. And that's a hard conversation for the position you're in with investors. Like they want to go in and start making money. It's a hard sell when you're like, hey, we're going to take it. You may not cash flow for 3 years, but on the 4th year, you'll see a little bit. Like it's a harder sell for sure.
Yeah. And it just becomes a little bit more risky in the economy if hey, maybe it just takes you longer to fill a building. But I just believe in a lot of markets, there's big demand now. It'll keep pushing up rents. There'll be a need for new build, but our model is existing and add value.
Yeah. That's great. And as you guys continue to build and expand, obviously that's on the horizon for you guys. A new breed of investors is going to come in for you and already is coming in for you. Do you vet your investors? Like, do they need to meet a certain qualification? Do they need to like meet some metrics for you guys to know that they're serious? Like, how do you guys vet clients you bring in?
That's a great question. So, yes, we do vet them in the sense that I want to understand everybody, right? Going back to that guy who was over 75 years old, and he was talking to me as he doesn't want to be in a deal for more than 3 years. All right. And he wants cash flow of at least 7% in those 3 years. So I'm only going to bring him those deals. I want to know how people are investing. Are you going to use your retirement funds? Are you doing it for as bonus depreciation and reducing your taxes in year one? What's the most important thing? Is your timeline 3 years, 5 years, 10 years? That's important because we want to serve the investors to the best we can. I also don't want to be, if somebody's sweating over $25,000, I don't want to take their money. I don't like, they're not ready to do this. Let's keep the relationship going, save some money, and I'll help them through that financial plan. Now that's a different case. I know somebody who's got, like a $4 million house that he just bought and renovated, and they were in the process of like moving in. And he's like, I'm just don't have the cash this month. Can I come into a deal? Your minimum, I think on that deal was 100. He's like, can I come in at 25? And I saw it as like a long-term relationship. I'll work with you to come in. I know you have the money. And so just knowing all of those things about our investors, what are you looking for? What's important to you? What else are you investing in? You know, is this to help with your kids' college fund? Is this to help your retirement? Right? All of that's how we vet people. And I take pretty good notes.
Good. And I actually just watched Jordan Belfort on an interview, the Wolf of Wall Street guy, and he talks about the whole sell me this pen. I think that's how the movie ended. He was he's doing a public speaking thing, and he walks up to the front and he's like, all right, sell me this pen. And the first guy just talks about how good the pen is, which basically in your analogy could be like, hey, look at this apartment complex. It's so good. It cash flows here. But you have no idea if that guy even wants that apartment complex. You got to find out what he wants, and then you can bring deals to him that will fit his scenario, which was his analogy with the pen. You got to figure out if they even need a pen to sell them a pen, because otherwise you're just spinning your wheels. So that's super cool that you take that extra step to really know and boil down what's your motivation, what do you want? I will bring you what you want. It makes a happy investor.
It's listening to them, right? What's their timeline? If they're, and right now, a lot of people should be paying attention, right? I'm not saying don't invest in the stock market. It's actually, I think every time it drops, it's a good time to invest in my 401k, but I'm looking at a 20+ year horizon on my 401k. But I'm not necessarily going to go dump another $10,000 or $20,000 into Netflix or Facebook today, even Apple. What I'm looking at is how can I maximize cash flow today, but keep building my investment portfolio. And I believe you need to have a balance to a dropping stock market.
Yeah. Yep. It's all about the diversification.
Yep.
Even though some people are like Gary Vee, have you listened to him at all?
I believe so. Yeah.
Yeah. He's all about putting your eggs in one basket, like just push one thing. And yes, like you're pushing real estate harder than everything else, but you still have that diversification to help level things out, which I think is always smart in some capacity.
Yeah. And I invest for cash flow. Like that's Jared, right? I care about getting to a $5,000 a month number, and I have reasons for my family that are behind that. But so that's how I look at every investment versus other plays, which might be more equity infused.
Yeah, well, that's awesome. I mean, it sounds like you've started and created a really good venture capital firm out there. Hopefully we can get in, give me a couple of years.
Yeah.
And I'll be knocking on your door. Because that the whole out-of-state investing, it's something I want to get into, but I know I need a team for that one. I'm not set up with any systems. So that's super cool that you set that up using your past experiences to do that. You should find me a multifamily in Wisconsin.
Here we go.
I want to.
Let's partner on that one. Don't go out of state. Do what you know. Just let's combine forces.
Love it.
But I'll keep an eye out.
I'll hop in too, Marcus. I'll hop in too.
Deal. I have, and maybe you have another like tip for me. I've reached out to brokers and commercial lenders to say like, hey, do you know any of your clients that are on the horizon of sale that are looking to exit, maybe not today, but in 2-3 years? Could you keep my number when talks start going? Could you like toss me an email or give me a phone call? They're all receptive, but I haven't gotten a phone call back. Is there an easier way or an avenue I'm missing that I could be reaching out to find those on the horizon apartment complexes that are slowly moving?
You're going to need Noel, who's my partner that does the acquisitions, to ask that too. I think, though, it goes back to what you talked about earlier, what I've talked about. It's about relationships. So it's identifying 10 brokers within a region of that space and saying, hey, this is what I'm looking for. And maybe we have a conversation offline, whether you do it with me or on your own. these are 3 types of properties I'm looking for, and do that. And then once every 6 months, you should be calling them, or once every 3 months. And if they really are within like an hour from you, every 3 to 6 months, you want to be in front of them physically.
I got to read that book again. Networking is a contact sport. Because I admit I have not followed up with them. I sent them the email, and then I'm sure I'm nowhere in their mind at this point.
Right. How many other people do you think have sent them an email?
Yep. 20 times, I'm sure.
Mm-hmm.
So I got to get on the phone again. That's my job. I'll find us an apartment complex.
Love it.
Here in Wisco. As we sign out here, do you have any word of advice for someone who is starting in real estate or has started but is looking to grow? Do you have any little bit of advice for them as we sign out?
Learn. Really read books, listen to the podcast, figure out where you want to be, learn and network, and listen. And you got to have a network. Going back to your four legs of your stool, build a team in any way.
And how can people get a hold of you if they want to talk with you or get more information or invest with you?
Yeah, crowncapitalcorp.com.
Okay.
And you could find me on LinkedIn. I am the only Jared Asch, Jared Asch. I am very active, both for Crown Capital and for myself on LinkedIn, and that's a great way to find me.
Awesome. Well, thank you.
Yeah, I appreciate it. It's very cool to have someone who's had a few years in and been doing the syndication, because we do have a lot of single owner investment people, but not many syndicators. So it's a cool world to get into. And as you invest, it's like the chain of what is going to happen. You're probably going to get into a syndication. They're not as foreign as people think. So
it's like buying a stock. It's a passive, easy investment. But the difference between us and somebody else is you don't know Mark Zuckerberg or Tim Cook personally. You will get to know our partners personally, and we are one phone call away from you.
Love it.
Yep. And as an investor who's getting in or have done it, having people that you can call is huge. There's a lot of syndications out there that are just algorithms that you don't get to talk to anybody. And it's kind of stressful when you have questions.
Mm-hmm.
So I like your avenue. I like what you have set up. We'll definitely talk in the future. But thanks for giving us the time today. A lot of knowledge. So thank you again. I appreciate it.
Great. I appreciate it. Learned a lot from you guys. I'm going to go check out those plans.
Awesome.
Definitely. We'll talk soon.
Thank
Have a good
you.
weekend.
Have a good weekend, guys. Bye.
Bye.